Good day. Today we're going to be looking at Ifrs 16, that is the new standard on treatments of lease, and we're going to be comparing it with IS 17, the old standard we had on lease treatments. Now in today's lesson we're going to be covering some aspects of discussion which we've outlined here, and the first one is the brief introduction to IFRS lease. Second one is a general overview of lease and which parts of this standard, that is IFRS 16, affects. Third is the new treatment, if any. And finally, we'll be taking examples, and the examples would be in the part 4 of this lesson for us to understand better. I'll take it again: the brief introduction to IFRS 16 lease. Second is the general overview of the lease and which parts this standard, that is IFRS 16, affects. Then new treatments, if any, what are the changes to IFRS 16 to IS 17 that make up IFRS 16. And finally, we'll be having examples that will take care of IFRS 16 treatments in the part 4 of this class. So right now we're going to be going over to the brief introduction to IFRS 16, and we have some notes here. It says the new IFRS is basically an update on the old IS 17. The new standard on lease was proposed to replace the IS 17 on the 1st of January 2016, but became effective on January 1, 2019. So we have few financial statements prepared with it thus far. I'll take it again. The new IFRS is basically an update on the old IS, that is IS 17. The new standard on lease was proposed to replace the IS 17 on 1st of January 2016, but became effective on January 1, 2019. So we've had probably a year from then till now, that the standard was changed from IS 17 to IFRS 16. So if it's a year, we just have 1 year of companies preparing their annual financial statements complying with the new standard, so it's relatively new. And it says, so we have few financial statements prepared with it thus far. It goes on to say it carries on most of its definition over from the IS 17 that it replaces. However, there are quite a few changes made to the standard that are substantial. I'll be looking at areas where the changes are substantial. We have a diagram here. It covers areas in lease, specifically the viewpoints in lease. We have lease, then in a lease we have the leaseholder's viewpoint, and then the lessee's viewpoint, and each one of them has the finance lease and an operating lease in them. So the treatments of the new standard IFRS 16 differs majorly in the area highlighted in this diagram, that is the treatment of operating lease in the lessee's view rather. So the lessee is the person who pays periodic rental payments to the lessor for use of his assets. And now we have the change in accounting for operating lease in the lessor's view. So we'll look at it further down. We have the general overview of lease and which parts of this standard, that is IFRS 16, affects. So we have IFRS 16 focuses on the leasee, which is under the leasee in this diagram here. Then we have specifically the leasee's operating lease. So here in this diagram we have the leasee, then it goes down to the operating lease. So the leasee's operating lease is what is majorly affected in the change from IS 17 to IFRS 16. So it says, oh, okay, we will not separate the presentation of operating lease and finance lease any longer for the lease. So what does this mean? Areas of importance are highlighted here, so we could quickly jot down in case the video goes too fast for us. We could quickly jot down some key points. And it says it means the same manner of treating a finance lease should now henceforth be used for the lease's operating lease. The same manner, I'll take it again, the same manner of treating a finance lease in the lease's view should now henceforth or should now be used for the lease's operating lease treatment. So basically now the new IFRS has cancelled any distinction in the treatment of the finance lease in the lease's view and that of an operating lease in the lease's view. They have the same treatment as from 1st January 2019. So I said I would write it out in caps here. The same manner of treating a finance lease should now henceforth be used for the lease's operating lease. They now have both treatments the same. So now it goes on to say, now rather than expense the amount paid for yearly as operating lease, as we've discussed in IS 17, operating lease was expended, that is kept in the income statement as an expense rather. But now it says the lease should be capitalized regardless of finance or operating lease to the lessee, whether the lease is a finance lease or an operating lease to the lessee, as long as it is in the lessee's view, now it should be capitalized. So what we have to do first is to know if it is a lease. Then once we know if it is a lease, we would capitalize it whether it is a finance lease or an operating lease. So we go down and it says, in doing this as regular assets, the value of the leased assets is depreciated yearly. So after capitalization, the next thing you do for assets is to depreciate it. So okay, I was not done with the former one. It says a separate heading under assets in the statement of financial position, rather that should be position, be made to post the value of the operating lease. So also the liability sections, the same treatment for finance lease should be applied for operating lease. Now it says down here that there are reasons for this, and they include, the first one is previous treatments in IS 17. Some companies took advantage of the loophole in not presenting operating lease assets in their books to underreport values of assets. Hence, it was more favored because there is lesser disclosures on them. Now, in the previous IS 17, operating lease was not required to be kept in the balance sheet, or what is now called the statement of financial position. It was to be recorded as an expense and written off. So it was For companies who wanted to enjoy some benefits, probably tax benefits, from lower value of assets, were engaging more often in operating lease contracts. So it was not a fair representation of what their assets were, since it wasn't recognized in the statement of financial position. Another reason was comparability of assets of similar companies were hard to determine. And it goes on to say, while some companies had smaller bought assets as acquired assets and large assets derived on lease, others had the opposite. While some had smaller acquired assets that they personally own and larger lease based on operating lease, some others had the opposite of it. So the performance of the two companies related became hard to compare because operating lease assets were not accounted for in the statement of financial position. A company that has a lower bought assets or acquired assets and posts it in its statement of financial position compared to another company that has a higher number of bought assets in value and posts it in its statement of financial position could not be accurately compared together, because we could have the lower bought assets having a very large number of leased assets when compared to the other with a higher bought assets. So comparison became hard to determine. It goes on to say IFRS 16 has, however, largely taken care of this by requiring mandatory capitalization of all leased assets regardless of an operating or finance lease. It recognizes a lease on rights of use. I'll go again. It recognizes a lease on rights of use on an asset to be capitalized, rather than the old transfer of significant risk and reward. Now, this is a hint on a new definition to lease, that rights of use has to be there for the lessor before you could qualify it as a lease. So it recognizes a lease on right of use on an asset to be capitalized rather than the old transfer of significant risks and reward. So we'll move over to measuring the lease. How do we measure the lease once we have determined that it is a lease and it is an operating lease? IFRS 16 says in measuring a lease, we should use the present value of lease payments that are not yet paid at date of discounting using the implicit rate. Now we'll do examples in this in our next class, because this class will be quite short. We'll do examples in this in our next lesson for understanding, like we've done before previously on IS 17. Then it goes on to say, when you lease some assets under operating lease as called by the older IS 17, in most cases a lessor provides certain services such as maintenance, repairs, cleaning, etc. Under older IS 17, you do not need to think about it too much, because you put all the lease, that is all the operating lease payments, as some rental expense to your profit or loss. So before you'd expend operating lease payments, the yearly payments, as an expense in your profit or loss account, but right now you'd have to capitalize them. Under the new IFRS 16, you need to split the rental or lease payments into lease elements and non-lease elements. So what this part of the note is trying to tell us is, in negotiating a lease, I'll give an example. In renting a warehouse, in leasing a warehouse, the lessor, which is the warehouse legal owner, could say, okay, I'm giving you this warehouse, and along with the warehouse, there will be maintenance. I'll call people who will clean the warehouse monthly for you while you take the warehouse as a lease. Now, the aspect of the monthly cleaning is not to be joined with the lease itself. It's treated separately as a service that is related to the lease. So we'll do treatments on that, we'll do examples on that later on in our next class to make it clearer. But right now, the service part of any lease should not be merged with the lease itself. We'll go over, and it says under new IFRS 16, you need to split the rental or lease payments into the lease elements and the non-lease elements, which could be called the service part, because you need to, the first one accounts for a lease element as for a lease under IFRS 16 if it meets the criteria in IFRS 16. Then account for a service element. We listed some service elements up here: maintenance, repairs, cleaning, etc. In most cases as an expense. So while you capitalize the lease aspect, you expend the service aspect of the lease agreement. So areas relating to services tied to a lease are separated. We have example: maintenance of a leased warehouse by the lessor to the lessee, like I've said. And it says IFRS, however, permits recording both service and lease components together if inseparable. This would increase the value of the lease, but never, or that is, never the service and the lease components recorded as a service itself. Now it says IFRS permits recording the service and the lease components together if inseparable. And obviously this would increase the value of the lease because the service part was added to it. But never should you record the service part and the lease part together as a service itself. And once you record both as a service, that means you'd expend both of them. While if you record both as a lease, you would capitalize them. So the first one is more acceptable, and there's a condition to that: if inseparable. So we move over down, we say what about lessor and accounting for leases under IFRS 16. And there's a point here in gold. It says accounting for leases by lessors almost does not change, so they can continue in the same way, like we gave in the diagram above, which I'll go to. The main area affected by the change of the lease is the operating lease in the lessor's view. Now, previously it was expensed, but now it should be capitalized in our statement of financial position, just the same treatment as the finance lease in the lessee's view. So we'll go over to where we stopped down there, and it says IFRS gives two exclusions. Now there are two exclusions to this, two exclusions to capitalizing the assets. First one is if the lease is on short term. An example could be lesser than 1 year, lease term. And the second is if the lease has a low value, that is, there is no absolute definition of low value. Now first, I'll take it again: if the lease is on a short term, and the second, if the lease has low value. So we have short term and low value. Those are the two exclusions that could be excluded from capitalizing the operating lease in the statement of financial position. So we have finally the goal is to improve comparability and transparency. So like I said, it will be a short note, and the next class will take care of the examples, so we'll be able to know this standard better. Thank you.